Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, May the 3rd. The year's 2023. Let's talk trading. Do not marry your trade with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal. Walmal, this was your idea. So, till death do you part. Don't marry your trade, right?
Exactly. Unfortunately, I do come up with some ideas sometimes, but and usually it comes out of because of a mistake I made. Last week I believe it was. I got into a trade, and I was married to trade. I knew what this trade was going to do. I knew that I can remember every minute of this trade that I sat in for, and I sat in it for a long time before I finally bailed out and took the loss on it. But the thing is that, sometimes you get into the trade, you may even get into the trade for all the right reasons. And it just doesn't work out. It doesn't pan out the way you expect it to. And, and the thing is, it's sort of like, when you get into a relationship, before you get married even, and you're trying to determine if that person is that person that you want to be in a long-term committed relationship. Listen to your friends. Listen to your friends who really are your friends. The ones who will go and actually tell you the truth and say, "Hey, what are you doing?" And our friends in this case is the charts. Listen to the charts. Look at the charts. Pay attention to what they're saying to you. If it's saying something different than what you thought, man, get out of your relationship with it because because if you don't, it's just going to run you, and it's going to run you. It's going to run you bad, and and that's what happened to me last week. I took a big loss. I took, like a, I don't remember exactly how many picks it was, but it was a lot. Let's put it this way: in that trade, I should have been out multiple times. There was opportunity to get out, and I just, nope, I'm going to stick here. I'm sticking. I didn't even hedge against it. I didn't do anything to go and protect myself. Nope, and the next thing you know, I didn't hit my daily limit, but I did hit my limit for a trade, how much I'm willing to lose on a particular trade. And there was no reason for that. It was the type of thing, let's say your limit is that you're willing to lose $100 on a trade. You know, that doesn't mean you have to take $100 loss every time you take a loss. It's okay to take a $30 loss or a $40 loss if you're looking at it and say this is just not doing what I expected it to do. My method's only as good as the method is, and the method doesn't mean it works every time. The best method out there isn't 100%. You know, it's just going to be, whatever it is. And if it wins 75% of the time, man, you can make a lot of money on a method win 75% of the time. But you got to remember on that 25%, get out.
Yeah.
Get out.
Yeah, it's funny. I was watching that show, How to Be Rich, or how to Be Rich? Yeah, on Netflix. And this one guy, and him and his wife, he had bought some options and made a ton of money, and then he bought DraftKings, and he lost 80. He was down $80,000, and he hadn't told his wife. She didn't find out till they were on the show. But the thing is, the main guy Ramit, he was telling them that he goes, trading, isn't investing, it's gambling. It was so funny because I go, yeah, of course, trading is not investing. We're not investing here, we're trading. But it was so funny the way he was saying that. And I think the guy
Yeah.
finally got out with like $100 loss or $100,000 loss or something. Took another 20,000 on the chin, and he's going to take the rest of the money that he had and put it buy a rental property, an income property. It's too funny.
Yeah. Well, and you're right. What you said. Well, what you said, where it's gambling, and in a sense, it is. The only advantage that we have is that we know what the rules are, and if we can shape the rules around what we what we see happening on a daily basis, and we're smart, the reality is that we can make a living. There are people who, we know that Las Vegas is rigged. We know that for a fact that it's rigged. We know that horse racing is rigged to a certain extent, Yet there are people who actually make a living off of it. And how is it? Well, what they do is they study what goes on, and they're able to go and watch and pay attention to what is happening out there, and able to take advantage of some of the things that happen. Well, it's the same thing with trading. You know, in one sense, if I go into short right now, you know, it's a 50-50 chance in one sense that it's going to go up or it's going to go down. As far as, you're flipping a coin. The difference is that sometimes you can look and say, hey, that side of the coin is a little bit heavier than the other. And so we're able to go and say, yeah, I'm going to take heads because it seems that this coin has a heavier head and a tail. And so you're able to go and maybe make some money off of it. Well, that's kind of what we're doing with trading. It's the type of thing where, like if we look at I don't know what charts you have up, sir.
1 minute.
But, if you look at, okay, we have, two bars in a row, that are down bars. And we just know that, what, if you just look to the chart, look to the left, look to the right, it likes to go maybe 2, 3, 4 bars tops, and then it likes to go and do a bar go to the upside. So what do? You wait for this third bar to close and see if there's a trigger to go in the other direction. If that happens, and what anybody trigger is, whatever your method is, doesn't line up with that. Then it's sort of like, boom, you can go and do it, and take a pip or two, and at least that's how I trade, or if you're a type of guy that goes and likes to do the swing trading, and or water block trading, what are you doing? You go out there, you look at your charts, you figure out your support levels are and your resistance levels are, and draw those lines on the chart, wait for it to get there, wait for it to test it, wait for it to come back from that test, and then go and take the trade. When you think about it, it's real simple. It's just what's not simple is the fact that it doesn't work every time. And so what does that do? Well, what it does is, you can either one, be married to it. I know this. I'm on order block trader, and I know this thing has to go up because it went and hit the 50 line or whatever line it hit, and look at all that support that's there. It's got to come up from here, and next thing you know, I put a trade in there, and what does it do? It goes and breaks it because it's not done running down yet. You know, uh, you know, maybe I didn't see something, or maybe it's just the market. The market just, now am I going to be married to that trade and just say, I know it's going to come up? And the next thing you know, I'm down 30, 40, 50 pips. It's like, oh my gosh. Now I'm in a situation like that guy was where I'm down, if I had let's say I had a $250,000 account, I'm now down 80 grand. you know, it's like, well, there's 25% of your account gone in, a day. You can't be married to that stuff. It sounds like, oh, that'll never happen to me. Yeah, keep telling yourself that because I've never met a trader where it hasn't happened to you. You just get so invested in the trade, invested in the idea. I don't like to take losses, or you invested because you just that trade was a beautiful trade. It has to work out. Maybe it's just got to run down a little bit and just take a market breath, and I'll be able to go and maybe I can go and average in below it and get away with it. And the next thing you know, it's run even further away from you.
Yeah, exactly. Because I'm looking at, I've got that 1 minute chart with the three level ZZ, and I've got the fibs between the two three balls. And it's like, price went down. In fact, it was in the lower H4 wick zone down here, and then it bounced up. And then you see it came up to the 23% retrace, the 38, and actually hit the 50% retrace twice. That's what a lot of the fib traders will look for. And it's like, it's going to hit the 50, but then all of a sudden it doesn't quite get to the 50, and it starts pushing that three ball down further and further.
Yep. I've had that happen to me time in and time again. It just, it's, I hate to say it, but it's second nature. It's natural for it to happen, you know. Um, but we have to go and just recognize that, And it's such thing like I was talking about the three bars, right? So we about 5 6 minutes ago we had three bars come down, right? Then we had a nice little flip flop box there. Oh, that's a good place to go long. And here's the thing: you could have gotten a tip and a half off of that trade, but if I had it in my brain, hey, this thing already ran down from the 2,500. It's got to get back up to that 2,500. And I was married to the idea of the 2,500. Well, guess what? Now it'd be underwater by 2 or 3 pips, and instead of just taking my pip and a half off the table once you showed signs that it wasn't going to work out, or maybe just get down to break even, maybe taking a small loss, I could wind up here where right now if it breaks this level, it's going down to test that tail from when that news came through. So it's going to go down to the 2485, and then it's all over. You're down another 5 pips, and who knows where it goes from there, because if it breaks that level, now you're really gone.
Well,
And very
it's
easily.
yeah, it's kind of like my yellow line theory or psycho. It's between the 00 and the 75. It's going to hit one or the other. It's just
Right.
which one.
Yeah. And all we can do as traders is sit there and look at the charts and say, hey, there's a higher probability that it's going to go this way or that way. I'm making a judgment call. And that's all it is a judgment call. And sometimes I'm right, and sometimes I'm wrong. If I go and, make sure I take the money when I can take the money, mitigate my losses, at the end of the day, I got more money in my bank account than I did the day before. And
Yeah.
that's trading.
Yep. And the other thing is that we don't really plan for loss. We'll say, okay, we're going to risk this much, and here's where the stop loss is. But psychologically, we really don't plan for a loss. We're looking forward to a win. We're looking for green. We're looking to take money off the table. But we don't, and the funny thing is, we don't even expect a loss. I mean, our psychology is so lopsided or unbalanced. Did you just
Yeah.
get in a
And
trade?
no, I did not.
Oh, okay.
Yeah. My phone started doing some crazy things, so I was playing with it for a second. But yeah, you're right. We plan for the win, but we don't plan for the loss. And then there's also a set of traders out there that do the opposite. They plan for the loss, but don't plan for the win. And what I mean by that is that they're really good at their risk management. Okay, to the point of which maybe being overly aggressive on getting out of trades, and then as soon as they see they see one point, not even a pip, but 1 point of profit, and they're not willing to see if it gets to the point where you can go and get a full pip or 2 pips. There are those traders that are out there too, and usually those traders though, where they come in, or where I've seen them come in, is because they've gotten deep and bad a couple of times, and then they're afraid, and that's the worst thing in the world. You can't be afraid. Now I will admit that every time I go and press that button, to go and buy or to sell, I get some butterflies. To this day I get butterflies every time I press the button, but I don't let those butterflies take over everything that's in my trading plan, or at least that's the goal anyway. Not to let that take over, because once that takes over, you're doomed.
Yeah, yeah. Well, it's about that time. The fastest 15 minutes in trading is up, and I've got if I had taken that flip flop box before and I saw that one ball, I think I would have made point 8 because once I see a one ball in front of me, I get out because I've been burned. Let's say I'm afraid of them daggone one balls. I've had my fingers burned so many times by by not getting out. So, fellow traders, don't marry your trade. Just, it's not till death do you part because death means you blow out your trading account. And We don't want that to happen. So when you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple One.